If you're launching or managing a hedge fund in the United States, one of the biggest challenges isn't the strategy, it's raising capital legally. Unlike traditional investment products, hedge funds cannot openly advertise to the general public unless they follow specific regulatory exemptions. So the question becomes, how do U.S. hedge funds legally market to accredited investors? In this video, we're going to break down the rules and share practical marketing strategies hedge funds actually use to raise capital. Hey, it's Frank Nagy. Welcome to my channel where we help financial entrepreneurs grow their business in the financial markets. If you're new here, subscribe to my channel and hit that like button. In the US, most hedge funds rely on exemptions under US Regulation D, specifically Reg 506B or Reg 506C. These rules allow hedge funds to raise capital without registering a public securities offering with the U.S. Securities Exchange Commission or SEC. But they work differently. Under Rule 506B, no general solicitation and investors must be accredited requires a pre-existing relationship with non-accredited ones. In 506C allows public marketing. All investors must be accredited and funds must verify accreditation. Choosing between these two structures determines how aggressively you can market your hedge fund. Under Reg D, an accredited investor generally includes individuals with $1 million net worth excluding their primary residence or $200,000 a year annual income or $300,000 jointly with a spouse. Many hedge funds specifically target entrepreneurs, business owners, doctors, and attorneys, family offices, and professional traders, and pension funds and high net worth investors. Hiring experienced hedge fund consultant like Frank Nagy Financial Services can greatly reduce the burden of setting up your hedge fund or offshore broker-dealer. A good consultant will make the appropriate introductions with fund administrators, auditors, attorneys, and banks that will help your hedge fund or offshore broker-dealer grow. Now let's talk about how hedge funds actually raise capital. Here are several strategies widely used across the industry and which I would recommend for my clients. Number one, educational content marketing. Many fund managers build authority through YouTube channels, podcasts, and market commentary and investment newsletters. This positions the manager as an expert, which attracts accredited investors organically. Number two, LinkedIn investor networks. This platform, LinkedIn, is one of the most powerful tools for fund marketing. Successful managers regularly post market insights, strategy explanations, performance commentary, and investor education. Over time, this builds credibility with high net worth professionals. Number three, investor webinars. Hosting private investor webinars allows you to explain your strategy, show risk management, answer investor questions, and many hedge funds run monthly Outlook webinars specifically for prospective accredited investors. Number four, strategic introducers. Another powerful method is working with investment advisors, capital introducers, family offices, and consultants. These professionals already have a relationship with accredited investors and can introduce qualified capital. By working with Frank Nagy Financial Services, we will place your hedge fund into the Bloomberg network for greater exposure to asset allocators. Some hedge funds also market internationally through offshore structures, often using jurisdictions like the British Virgin Islands. These structures are popular because they are widely recognized by global investors and institutions. However, managers must still comply with both U.S. security laws and the foreign regulations where raising capital internationally in those jurisdictions. Hey, if you'd like to learn more about Frank Nagy Financial Services and how we can help you set up and structure your U.S. or offshore hedge fund or offshore broker-dealer, click on the links below in the description box.